This conversation is powered by Google Illuminate. Check out illuminate.google.com for more. Welcome to the discussion. Today, we're diving into the intricacies of IRS Form 1099-K, a document that's become increasingly relevant for many individuals and businesses. It's a bit of a headache for some, but understanding it is crucial for accurate tax filing.
Absolutely. The Form 1099-K can be confusing, but it's essential to grasp its implications to avoid potential tax issues.
Many people aren't aware of the reporting thresholds and what types of transactions trigger the need for this form.
Precisely. The thresholds are changing, and the types of payments covered are broader than many realize.
So let's start with the basics. Who actually sends out these forms?
Payment card companies, payment apps, and online marketplaces. Essentially, any third-party settlement organization, TPSO, are responsible for issuing Form 1099-K. They're required to send a copy to both the IRS and the recipient by January 31st.
And who receives a 1099-K? Is it just for large transactions?
Not necessarily. You'll receive a Form 1099-K if you receive payments for goods or services via credit, debit, or gift cards, or through payment apps and online marketplaces. The amount doesn't always matter. The key is the method of payment.
That's a crucial point. So even small transactions can trigger a 1099-K if they're processed through these platforms.
Correct. While the reporting threshold is changing, the IRS is taking a phased approach. Companies might send a 1099-K even for amounts below the official threshold. Regardless of the form, you must report all income from selling goods or services.
Let's talk about those reporting thresholds. They're changing, right?
Yes, the American Rescue Plan Act of 2021 lowered the threshold. For 2024, it's $5,000. This will decrease to $2,500 in 2025 and $600 in 2026 and beyond. However, as mentioned, companies may still report lower amounts.
So the threshold is decreasing over time, but the obligation to report income remains the same.
Exactly. The threshold change only affects the reporting requirement for TPSOs, not the taxpayer's obligation to report income.
What about personal payments? If I get money from a friend for a shared expense, do I need to report that?
No. Personal payments from family and friends, like gifts or reimbursements for personal expenses, are not considered taxable income and shouldn't be reported on Form 1099-K. Think shared rides, birthday gifts, or roommate rent payments.
That's good to clarify. So it's really about distinguishing between business transactions and personal ones?
Precisely. If possible, mark these payments as non-business within the payment app.
So someone receives a 1099-K. What's the next step?
Use the Form 1099-K, along with other records, to accurately calculate and report your taxable income when filing your tax return. The IRS website offers helpful resources on this.
Let's illustrate with some examples, selling items on eBay, for instance.
That would likely trigger a 1099-K if payments exceed the threshold, depending on the payment method. The same applies to services provided through platforms like freelance marketplaces or ride-sharing apps. Renting property online also falls under this.
And what about selling handmade goods on Etsy?
Again, if payments are processed through a payment app and exceed the threshold, a 1099-K is likely.
Is it possible to receive multiple 1099-Ks in a year?
Absolutely. If you use several platforms for selling goods or services, you could receive a Form 1099-K from each.
Where can people find more information and assistance?
The IRS website, irs.gov, is an excellent resource. They have FAQs, publications, and other helpful materials to guide taxpayers through the process.
Why is it so important to accurately report this income?
Failing to report income accurately can lead to penalties and interest from the IRS. It's crucial to maintain accurate records and understand the implications of Form 1099-K.
What if someone receives a 1099-K when they shouldn't have?
The IRS website provides guidance on how to address this situation. It's important to contact the relevant payment processor or platform to rectify the issue.
Are there any other resources you'd recommend?
Yes, the IRS offers publications like Publication 5951, which addresses common myths and facts about Form 1099-K. They also have a Gig Economy Tax Center and Self-Employed Tax Center with valuable information.
This has been a very informative discussion. Understanding Form 1099-K is clearly crucial for anyone involved in online transactions. The key takeaways are the changing thresholds, the importance of accurate record keeping, and the availability of resources on the IRS website to help navigate this process.
Precisely. Proactive understanding and accurate reporting are key to avoiding potential tax issues.
That was a great discussion. Thank you for your expertise.